Good morning, everyone watching live here on BAM YouTube. Let me know in the comments where you are tuning in live from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss the latest on banks collapsing, home builder sentiment, and the best time to sell according to Realtor.com. They actually have a week identified for this year. Today is Thursday, March 16, 2023. I am Byron Lazine, and the Hot Sheet starts now. I am longing for the hot sheet when I won't have to open and give some type of brief update on banks. That day is not today. Hit the thumbs up if you agree with me. Okay, so just quick update on what's going on with the banks. First Republic this morning fell 30% as regional bank stocks continued to sink. So when we Tuesday saw them all pop back up, only to fall again yesterday and then again today. It looks like the reality of this regional bank issue is going to stick with us longer than those on Twitter on Tuesday saying, "Oh, it was just that was just a one day. Monday was a great time to buy when they were down. It's all over." It's certainly not over. European Central Bank just raised rates by another 50 basis points despite all the bank turmoil, and there is overseas bank turmoil. We saw Credit Suisse yesterday drop significantly. Their stocks, though, are up 20% today after Swiss National Bank loan announcement. Check out the size of this loan, $54 billion from the Swiss National Bank. When SVB was trying to fix their problems before shuttering, they were trying to go out there and raise, I think it was 2.8 billion, like 2.8 to $3 billion, something like that. Credit Suisse just borrowed a loan of $54 billion. I mean, what do you think the payments on a $54 billion loan could be? But that's what's going on in the world of banking right now. There is a lot of uncertainty. There will absolutely be some more shoes to drop. I'll give you a quick update where the markets are. It's not looking good again today, just like yesterday. We're down 250 points on the Dow. This is 2 minutes after the open. S&P's down almost 0.75%, and NASDAQ's down about 0.5%, 61 points. That Dow number, 250 points, would be 0.8%. Okay, so there's your updates on the banks. Let's go to a home builder update. And this is better news for housing. Home builders say that demand is rising for them. They are concerned about the banking fallout. So according to CNBC, home builders starting to feel better about the market for single-family homes. It's the third straight month for an increase in builder sentiment, according to the NAHB Wells Fargo Housing Market Index. The NAHB, National Association Home Builders, Wells Fargo Housing Market Index, is based on a monthly survey of NAHB members. That's mostly, builders and contractors, designed to take the pulse of the single-family housing market. The survey asked respondents to rate market conditions for the sale of new homes at the present time and in the next 6 months, as well as the traffic of prospective buyers on new homes. Okay, so what was in the actual survey? Okay, anything above 50, it's a scale of 100. So just a reminder, anything above 50 is considered positive. So it rose 2 points, but it rose 2 points to 44. So you can see the last 30 days better than 30 days prior, but overall we're still below the number we want to be at, which would be up above 50. We've talked about this a bunch on the hot sheet, and we've shared a whole bunch of charts. I've got a few charts today down in the daily download link. It's the third straight monthly increase in builder sentiment. The index stood at 79 March of last year when mortgage rates were significantly lower, right? So builders understand that we're in an inventory crisis in almost every market in America. And they also know that when rates are lower, it makes their product, which is typically going to be higher priced than any resale product in their market when you're looking at similar square footage, similar location, etc., that those lower interest rates help entice people more towards the newer product. Okay. I believe, and I know we've had some chats here in the comments. Let me know what you're thinking, how you're thinking about this right now. I believe it's a benefit for builders to go out there with consumers that can lend directly to them and give them a lower interest rate. If I can get a brand new product right now as a home buyer and get a lower interest rate from the builder that I can't get directly from the bank, that's a win-win. I know real estate agents don't love it because they feel like some of these builders are sheltering them out of the equation. Listen, it's part of the market. It is what it is. If you want to get in there and get involved in the deal, you've got to bring the value, right? And so you better have either a really tight contract with your buyer, and be able to present that to that builder. Builders aren't going to turn deals right now. It's about how you position yourself as the agent in that situation. I know some may disagree with me there in the comments, but you're in the business of contracts and negotiation, right? Have a tight contract coming in, be a strong negotiator. I'm certain you'll get paid on that. Of the index three components, current sale conditions rose 2 points to 49. So feeling better with the last 30 days on current sales conditions. This is builders. The buyer traffic rose 3 points to 31. So pretty low on buyer traffic, but it's increasing as we get into this spring market. Sales expectations in the next 6 months, however, fell 1 point to 47. So how they feel about the next 6 months, too much uncertainty for that number to be higher, right? Too much uncertainty in the banks, too much uncertainty of what the FOMC is going to do next week when they decide federal interest rates. Too much uncertainty on that big May inflation report, the year-over-year report that we're all looking at. And so builders reflected that in their survey, falling from 48 to 47. Why financial system stress has recently reduced long-term interest rates, which will help housing demand in the coming weeks, right? We've seen that here in the last couple of days. We probably should see that again today, looking at where the 10-year is today. The cost and availability of housing inventory remains a critical constraint for prospective home buyers. Robert Dietz, NAHB's chief economist, in the release. The nation's second largest home builder, Lennar, reported quarterly earnings Tuesday that beat analysts' expectations. Lennar's chairman, Stuart Miller, noted homebuyers are considering the possibility that today's interest rate environment may be now the new normal. Okay, so people are starting to, you can put that back up there, Bobby. I missed that one, so I'd love to see it. Builders out of control once again. Should have never bailed out SVB. Love to know why builders are, oh no, bankers are out of control. Okay, I've got you. I thought that was builders. My apologies, Matthew. I think some of that can be seasonally since the minimal increased activity interest. It's typical for Vegas. Yeah, definitely there's going to be interest that pops up seasonally here. No doubt about that. Regionally, because I know you just mentioned Las Vegas. Regionally, on a 3-month moving average, builder sentiment in the Northeast rose 5 points to 42. Northeast is, out of all the regions, the region with the least amount of inventory right now. So that makes sense, moving up 5 points. Midwest, it moved up 1 point to 34. South rose 5 points to 45. And the West, it moved 4 points higher to 34, coming off of 30. Okay, I've got a few charts here, and they'll all be available for everyone down below on the daily download. And let me just pull those up. Bobby, if you've got a comment while I'm pulling that up, you certainly can do that. Do you think the Fed's plan to kill the smaller banks off? I know that's a conspiracy theory that the Fed, wants to go and kill off smaller banks and move it all to, the big four or the big eight or whatever. Like I shared earlier this week, I think that would be a tragedy for America to not see, some regional banks. We certainly, as real estate professionals on this stream, know how much it would impact people's ability to get a mortgage and get into home ownership. Now, we have seen signs from the federal government that they do want everybody to rent, despite the couple of little sprinkling you know, sprinklings that the Biden administration has done in recent months, where they're like, you know, trying to help home ownership. The really everything that was done the administration before and the current administration up till, you know, the last, you know, couple of months, they've made it really advantageous for people to build multifamily. So, you know, for your conspiracy theory here, I'm just helping you out. That might be one point that says, yeah, they want everybody to rent and be at a big four bank. Yeah, I don't know. I don't believe that to be the case. I got a little bit more faith in the federal government than that. We know to have a really fluid working economy, we need regional banks. We need banking competition. We need options. We need a strong banking system in this country. 4 banks, 8 banks is not a strong banking system. That's like banking. I won't even say the word, but it's not a good situation. Okay. All right. Let's go to the charts here. Housing starts for 1 unit structures in the red line, and then 2+ unit structures in the blue line. Both are up. Okay. You can see that on those recession lines. They basically went down every recession. I read an article today, Wall Street Journal, that recession may be closer now than ever, of course, because of the banking. But they've been saying that for 12 months. So who knows there. Sentiment and housing starts inch higher, NAHB, Wells Fargo. This is directly from that report. The green line is this single family housing starts. So this is starts are up a tick. We're talked about the index being up a tick, and then traffic of prospective buyers also up. Okay, so all good data points. If you're in a community that, or if you're in a market where you're consulting somebody that has, you know, a resale, and you need to position it against a, you know, a new construction, this is all data points you might want to share with them. All right, so average cancellation now has normalized. Match builder responses year over year, weighted averages, according to John Burns, Real Estate Consulting. This one this is the biggest positive out of the builder survey right now, is that average cancellation rate has come back to what is a more normal level, right? Look at 2019, for example. Okay, this line here is about the average. If I take that line all the way across the screen, it's pretty much in line with where we are today. February 2019 was 10.8%. February 2023, 10.8%. Okay, so yeah, I think that's a good sign that the buyers that we do have are committed. They're serious. They're strong right now. So good information there. And now jumping over to when the best time to actually sell. So maybe you're consulting somebody who's got a resale home or whatever, and they want to know when the best time to sell is. Realtor.com over on nowbam.com says that it is April 16th through the 22nd will be the best time to sell in 2023. According to Realtor, the best time is April 16 to 22. Sellers who list their home during this window will experience the best combination of market conditions and could boost their sale price by $48,000 if they prepare for the sale with calculated repairs, valuable updates, and effective marketing tactics. So if somebody says, hey, I need more time. If I'm an agent, I'm consulting the seller who says, I know you're saying inventory is so low right now in March that it's the best time to sell, but I need a little bit more time. I got to move some stuff out. I got to, you know, I got to paint a couple walls. There's some things I need to do. Great. Let's set a deadline for April 15th, tax day, baby. We're going on the market April 16th. And at least you have data to back up that reasoning. April 16th to April 22nd is the best week to be on the market. So let's get on at the beginning of that. And at least you now have a deadline and a game plan to hold that seller to, because we know that sellers without a deadline, without a game plan, could drag that thing out till May or June, just because it's human nature, just because they're busy, just because they got a lot of things going on. And that's going to hurt their chances to get the most money possible. So sign them to a deadline there and use this report as the data. To help sellers capitalize on the most ideal combination of market conditions, Realtor.com created a countdown page complete with the House Whisperer to help them identify the best week for their zip code and for their home sale. Danielle Hale, I'm sorry, Danielle, from Realtor Chief Economist. Many home shoppers kick off their search in early spring. They often beat the majority of home sellers to the punch. For this reason, sellers who list on the earlier side will get more attention, and therefore, and this is what if you've been following the hot sheet, I've been saying this. I disagree with Realtor. I think right now is the best time because depending on where you are, you have less than 3 months of inventory. Everybody reading this chart, you might have more competition in April. Okay. We know. In the comments, let us know how many times have you seen multiple offers in median price points or below right now because you're one of one listing. I'd rather be one of one than one of five. You can't tell me there's going to be more buyers in the market on April 16th than there are now because realtor.com, you can't tell me what the interest rate is going to be on April 16th. I know that it's 6.5 yesterday, and I know it's likely going to go down today, but is it going to be 7 on April 16th? I don't know. What's the Fed going to do next week? Is it going to be 7.5 on April 16th? If it's going to be 5.5, you're probably right. There'll be more buyers. But with everything we know about from January 1 till today, with everything we know about the last 12 months, realtor.com, you sure as hell don't know what the interest rate's going to be. But I know what it is today. I know how many buyers there are today, and I know how many few listings there are today. I'm going on the market right now if I'm a home seller in 2023. And I know they've got to pick a week. They chose April 16th to the 22nd. Doesn't mean it's going to be right. I think right now is your best time to sell. With for sale inventory still low compared to pre-pandemic levels and mortgage rates hovering, smart home sellers were hoping to maximize the ROI from their home sales, already preparations from their home. All right. Yes. I think they should have been doing that sooner. They haven't done it yet. There's still time. And I think that's, the biggest takeaway here. And if somebody needs more time, use that as the data to hold them to the deadline of earlier in the spring. It's to their benefit. You're doing them a great service by sharing that information with them. Prices climb. This is why I've been saying this, because you've been seeing this trend, okay, where these two numbers are pulling away from each other. The red being active listings on a nosedive down, and then median listing price continuing up. This is overall. This is certainly relative to the median price points in America. When you see those two things pulling away, it means sellers, you're in a power position. Real estate agents, advisors, advise them as such. Okay, really hope you enjoyed this one. We've got a walkthrough podcast premiering today, 5 p.m. Get into the comments over there. Danny Deals really feels good about himself when people share a lot of comments with how good of a job he's doing on the walkthrough. So go pump him up. I think he's doing a great job. The show's been fantastic with Danny Deals leading the charge. Hope everybody has a great Thursday. I'll see you back here tomorrow at 9:30 a.m. Eastern. Until then, toodaloo.